Good day. Thank you for joining me for this month's market update and offshore fund performance. A look back at the markets in October. COVID-19 lockdowns were reintroduced in much of Europe, and investors awaited the US presidential election. Global equities declined in October as the US presidential election and rise in COVID-19 cases in many countries, notably across Europe, were the main focus for investors. Emerging market equities bucked the trend and gained due to expectations for additional fiscal stimulus in the US. The prospect of more stable trade relations with the US under a presidential Biden victory also proved beneficial. In fixed income, the US 10-year yield rose, meaning a price decline, which seemed to reflect rising hopes of economic stimulus. However, European yields fell as COVID-19 cases increased and lockdowns returned. Looking at another metric breaking down the fixed income indices into maturities, government, corporate, and high yields. In the US, the biggest gainers we saw long duration, high yield bonds adding positively, while long duration government bonds felt some pressure. This is an exact reversal of the previous month. Before we get into the funds, it's important just to remember the philosophy of the PSG multi-management fund team. Looking at the individual portfolios. For the month, and looking at the AUM for each fund, October produced more positive flows, with the current AUM at 1.67 billion. For the asset allocation, this has remained relatively constant over the month. Looking at some highlights for the month. Through the turbulent times, the PSG selected managers have maintained consistent performance, with 76% of the underlying managers outperforming their peer group over the 6-month period. Extending this out over 3 years, we see that 92% of the underlying managers have in fact outperformed their peer group. For the month, we also saw a strong risk-on sentiment, with emerging markets gaining 2.1%. The disconnect between growth and value remains ever present, as illustrated by those quarterly returns. Looking at the PSG Wealth Risk Radar, only one fund remained this month. Now moving into the individual fund performance. Starting with the Global Preserver, the fund dropped 49 basis points in October, outperforming the sector for the month by 1 basis point. The fund remains behind the sector over the recommended holding period of 3 years, however, is closing the gap, and again is above the sector since inception. Looking at the 3-year chart, again I've highlighted the year-to-date performance. The story for the year has been much the same, with the higher exposure to high-yielding dividend and fixed income securities being hurt the hardest. The fund has a strong recovery and should see volatility reduce post the elections. Onto the Global Moderate. The fund dropped 1.56% in October, underperforming the sector by 12 basis points. The fund is also above its benchmark over its recommended holding period of 5 years and since inception by 70 and 16 basis points respectively. The 3-year chart again shows how the fund has performed in the volatile times, and as we can see, the fund has maintained a constant tracking against its benchmark. Onto the Global Flexible. The fund dropped 1.4% in October, underperforming its sector for the month by 26 basis points. The fund has outperformed its sector over its recommended investment horizon of 7 years and since inception by 5.65 and 6.09% respectively. From the 3-year chart, we can see the fund has held up exceptionally well during these volatile times. The fund has experienced slightly more volatility than the peer group over the 3 years, however, has been rewarded for this. Looking at the capture ratios, you can see that the fund picks up 1.31 times that of the peer group in a rising market. Onto the global creator. The fund dropped 1.81% in October, outperforming its sector for the month by 98 basis points. The fund has outperformed its sector over the recommended investment horizon of 7 years and is above since inception. Having a look at the 3-year chart, I've highlighted the year-to-date performance showing how the fund has reacted during the volatility. The fund experienced slightly more volatility than the peer group, however, has managed its capture ratios and drawdowns exceptionally well. The peer group rankings remain strong across the board, with longer-term numbers producing favourable results. 5 of the 6 funds have produced average and above performance over their recommended holding period. To tie it all together, we can see that the PSG multi-management team is achieving their 3-pillar approach of consistent above-average performance, at below-average risk, and at a competitive price. Thank you. Please take note of the following disclaimer.